Welcome back. We are now post or after the 2024 Bitcoin halving, and there is a lot of anticipation into what is happening next. And in today's video, we're going to explore my thesis and my analysis of the markets of what is next, what we're going to see as we go into the second half of 2024 and then into 2025, how high the prices are going to go, where are the areas that I am focusing on as an investor, and kind of like what my thesis of where the trajectory is going. Now, generally speaking, I believe the trajectory is much, much higher from where we are. But that doesn't mean that we aren't going to have corrections. And we effectively haven't really had any corrections since October of 2023, when I posted on my X page and said here on the channel that I believe we would see a rally. And then before the Bitcoin halving, we would have a capitulation. Now, we haven't really seen that capitulation before the halving. So, we saw a little bit of a dip, from March into May, you can see kind of here, but effectively there, from going from $72,000 to $62,000 over the course of a month or so, a $10,000 price difference, it's not that big of a change in crypto. Now, granted, some of these other assets in the crypto ecosystem did take 50, 60% hits, but we haven't really seen any major moves in the market. So let's kind of get into where we're going from here. And remember, nothing I say is financial advice. This is just a video that I'm giving you guys my thesis and opinions, and I could be wrong about anything and everything that I say, but I appreciate if you guys give the video a free thumbs up, hit that subscribe button. We are going to talk about specific stocks and cryptos that I am thinking about investing in, or I've already invested in. And we upload every single day on this channel. Thanks for supporting. Thanks for giving the video a thumbs up, commenting what you think down below, and let's get into it. So yeah, I mean, guys, I am a little bit surprised we have not had a capitulation before the Bitcoin halving. But that doesn't mean that we're not going to have a capitulation point, right? What we are seeing entering the Bitcoin halving is a dollar, or the Dixie index. This is the relative strength of the dollar compared to other currencies, is significantly stronger than we've seen. If we pull up this last 6-month chart, you can see in October, before the major rally that we've seen into 2024, we were in the 106 range, and we were at much lower prices in crypto. And so now we've been rising from about 102 in March to now 106. It's a 4-point change. This is huge because little changes in the dollar and the purchasing power of the dollar affect all other assets. For instance, when the dollar goes up, that means your dollar is stronger. So you need less dollars to buy the same thing. That's why typically you see prices lower in assets when the Dixie is higher. And when the Dixie is lower, typically you see much higher prices in assets because you need more of those dollars to buy the same thing. It's less strong of a currency. And so this is definitely a metric that I'm keeping a very close eye on, along with the 10-year yield, which has also been going up. So we've been seeing the 10-year yield going up, and the relative strength of the dollar going up, and a lot of geopolitical conflict going on, and the Bitcoin halving occurring. And now we're seeing 10x research says that Bitcoin miners could dump $5 billion in Bitcoin after the halving. And so this kind of goes into the thesis that we will have some type of corrective phase, right? As I've explained, the Bitcoin ETFs, we've been seeing a slowdown in the last 2 weeks leading up to the Bitcoin halving, where we started to see outflows out of the Bitcoin ETFs. And a lot of people said, Cryptoviser, the Bitcoin ETFs are going to keep pumping the market. It's like, no, they've been buying since January to reset the market before the halving. And they wanted to buy and have their stash before the halving. So there still may be some buy pressure, but it's not going to be the same as what we saw back in January when the ETFs first launched, at least until the Federal Reserve starts to cut rates and make money flow into the economy a little bit more, like what we saw in 2020. Whether it's going to happen to that level or not, I don't know, but I think it will. But according to this research, they believe that there could be large outflows of Bitcoin from the miners in the months following the Bitcoin halving. Again, months following the Bitcoin halving. They could potentially liquidate up to $5 billion worth of Bitcoin, according to calculations. They said the overhang from this selling could last 4 to 6 months, explaining why Bitcoin might go sideways for the next few months, as it has done following past halvings. They said the same could happen again, with crypto markets potentially facing a significant challenge in a 6-month summer lull. So yeah, I mean, if you look at previous cycles, and that's what we do a lot, we'll look at the charts and look at previous cycles. You can see in 2020, the Bitcoin halving happened in May, and it was pretty much sideways trading for most of the year. Granted, there was some movement in the pricing, but it wasn't substantial, right? It was like, within a 100 or 200% uh, increase or decrease from a specific point. And well, I shouldn't say 100% decrease, but you guys kind of get it. 100% increase or 50% decrease. Okay. And it took 6 months till about October till you started to see the run up. And that October run up, again, this was the same thing that we've seen this past year, 2023. October was the bottom effectively before we started to move higher, right? I mean, really September was, but we'll say October because that was right before the move higher. And so we moved straight up until basically March, and then March it kind of leveled out. This is very similar to recent, or I should say, historical data on the charts from what happened during previous halvings. And so this is something to definitely to keep in mind because the Bitcoin mining companies around the world, but specifically in the US, they don't want to go bankrupt, and they're also buying a lot of facilities. We heard from some Bitcoin mining companies that they're looking right here. Bitcoin halving has crypto miners racing for epic sat, potentially worth millions. Right, this is obviously them trying to go for that Bitcoin halving block reward, effectively the first Bitcoin rewards halving in which value can be assigned to individual satoshis, which can now be traded like NFTs following last year's launch of Ordinal's protocol. The first sat to be mined after this month's halving could theoretically attain a value of $1 million or more on marketplaces for digital collectibles. According to an executive at crypto mining firm Marathon Digital, he said it's kind of like a lottery ticket. And so it seems like the Bitcoin mining companies are going for this as well. According to the chief growth officer at Marathon Digital, he said, so if we take that Satoshi that's produced in an event that happens every 2 weeks to a Satoshi that's produced once every 4 years, I don't know what it's going to be worth, but it could be millions. So this is what they're focusing on. One Satoshi that's going to be worth millions of dollars now that Ordinals is on Bitcoin. Very interesting stuff, but we're going to see a lot of really overvalued things in this cycle that you're going to be like, wait, why is that worth that much? I mean, we saw JPEGs worth $3-4 million of a Bored Ape last cycle, and they're worth like maybe $20,000 now. Anyway, we're also hearing that banks are seeking to purchase Bitcoin directly from Bitcoin mining firm Hut 8, according to their CEO. Now, why is this important? Well, let's read through it and then I'll kind of explain. So Hut 8, which is another Bitcoin mining company, by the way, Marathon Digital that we just talked about, right now when I'm recording the video, it's about $14, $3.8 billion market cap. If we look at Hut is another Bitcoin mining company, $7 when I'm recording this video. Basically approaching the yearly lows. If you look at the last 1 year, $6.18, we're pretty much there. And this is $860 million Canadian, about 600 million, maybe 700 million US. Anyway, he says that he said that major financial institutions have made inquiries with Hut 8 to purchase Bitcoin directly from the firm. Additionally, the Hut 8 executive emphasized the forthcoming halving event's big impact. And so that's a very interesting perspective from this executive who revealed that financial institutions have approached Hut 8 to procure Bitcoin amid shortages on centralized exchanges. He said, we've had banks reach out to us to try to buy our Bitcoin because of the supply shortages on the different exchanges. The supply coming down by 50% from 900 Bitcoin to 450 per day also makes a big impact because now you have increasing demand but less supply. That's very interesting that now the banks and institutions are talking directly with the Bitcoin mining companies saying, we'll buy it directly from you. So effectively, they would probably have some type of agreement to buy it at some type of market price. And therefore, the Bitcoin mining companies and the companies that buying it from them don't have to worry about fluctuations in price and potentially much higher fees. But it also shows that this whole ecosystem of Bitcoin mining is really going to be a huge focus for a lot of these companies, and that they do view these Bitcoin mining companies as completely legitimate. And so why are these not going to be worth tens of billions of dollars, especially if they start to, if they're a little bit smarter with how they manage their money this cycle, right? We've just heard about Stronghold. This is a company that I've talked about on this channel before, and that I do hold the stock. Stronghold just put in, I'm trying to get these websites with these ridiculous size ads that you can't even read the article. Hold on. So here we go. Stronghold Digital Mining eyes a $250 million offering, and the CEO sells shares. It specifically says that they're set to potentially offer $250 million in various securities pending a review by the SEC. Their CEO recently sold shares covering tax obligations from his equity-based compensation. The salary structure includes significant portion of company stock aligning with their Stronghold financial strategies. So Stronghold has kind of like really not done that well over the last month now that we've heard that they're potentially going to be looking for more money. In the short term, I don't necessarily know this is that big of a deal, right? Because previous cycles, we saw, I mean, basically most of these Bitcoin mining companies were bankrupt at the end in the bear market, right? They took out way too much leverage. They bought way too much equipment for a down market, and then energy prices increasing. But the fact that some of them are doing this stuff now in the early stages of the market cycle changing into hopefully a bull market, this is potentially an opportunity, especially a $26 million Bitcoin mining company that's looking to get $250 million basically to expand their operations. So listen, guys, it is going to put pressure on that market in the near term, but in the longer term, I think that there's significant potential for a lot of these Bitcoin mining companies. Griffon Mining or Gryphon Mining, this is another lower cap stock that we're looking at. 100% renewable energy. They went carbon negative to shed the industry's greedy villain image, obviously about using too much electricity and all of that. Bitfarms is another company, right? We're seeing literally yearly lows getting touched this cycle, right? 92 cents was the yearly range. We're now at $1.70, so just 2x from that low as we're entering this Bitcoin cycle. And the narrative is going to shift at some point into these Bitcoin mining companies. I think it will probably be when they get more machines or when they grow their exahash or when the price starts moving up, people are going to start, and companies and institutions, I think they're going to start looking at a lot of these Bitcoin mining companies to see where they can make the money. Because keep in mind, there's only so much money these people are going to be able to make from the Bitcoin ETFs. And the Bitcoin ETFs are just specifically following the price of Bitcoin. But these Bitcoin mining companies, they're still making new Bitcoin regardless of where the price is. And they can hoard those Bitcoins as the price is lower or until the price goes higher if they are in a good financial situation. If they're not, they may have to sell it at low prices just to keep their operations going. So it's going to be really interesting to kind of see how it all plays out. But we have to keep our eye on the Dixie. We have to keep our eye on the 10-year yield. We have to keep our eye on the macro and understand until the Federal Reserve starts printing money. I believe that we're not going to see major moves to the upside. We're probably going to see more downside in the market. And this may cause the Federal Reserve to come out and start, easing and printing money or, doing something to kind of stimulate these markets. I think that is bound to happen. But remember, in 2020, all of that happened before the Bitcoin halving. This cycle, it's going to be happening after the Bitcoin halving. Potential rate cuts. I believe they will be cutting rates this year. And the higher the Dixie goes, the lower the market is going to go, and the more potential we are going to see for some action being taken from the Federal Reserve, and this could pump the crypto markets to new highs that people can't even realize. But, we'll continue to monitor the situation right here on the channel. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. Give the video a free thumbs up, and let me know what you guys think down below in the comments. Bitcoin after the halving, what you guys need to know. See you guys tomorrow. Crypto on.